So, what does it take to become a profitable trader? We all know trading's not easy, but I want to tell you it can be simple. So, what does it take? Now, I know that you've been told it takes all these indicators and oscillators, and you need algorithms and advanced decline lines and the stochastic and the MACD and the RSI and the Bollinger Band, the Kellner channels. And hey, I'm not knocking any of those. I'm sure they work just fine for whatever it is they were created to do. However, if you're trying to learn how to become a profitable trader, the last thing you need is a bunch of stuff on your chart that just confuses you, analysis paralysis, and you end up not knowing what you're supposed to do or when you're supposed to do it. So to become a profitable trader, you got to know when to get in. You got to know when to get out, when to take your profit. So these alerts that we provide are Logic 247 alerts. Now, these start Sunday night at 6 p.m. Eastern and continue around the clock in our private Telegram channel through Friday at 5 p.m. Eastern. So it doesn't matter where you are on the globe or what hours you have available to trade. There's always alerts in the channel for you to trade. The alerts tell you where to enter, what price. They tell you where to take profit. In fact, most Logic 247 alerts not only have an initial profit target, but a second, a third, sometimes even a fourth profit target. This is how you participate in what they call a runner. Now, again, trading's not easy, but it can be simple, and it really can be that simple. Logic 247 launched 110 weeks ago. Now, what's happened over the last 10 weeks, 110, I'm going to show you because I've got it right here. There we go. All right, this is for week 110, the week we just finished. We issued a total of 66 alerts. At 66 times where we tell you entry price, target price, everything. Out of the 66, 15 of them never triggered. So you had 51 actionable alerts. 9 of them were stopped out. So that's 18% of actionable alerts stopped out. Now, that's exactly what happened last week. That's the whole deal. Now, if take you back over here to the other channel where the alerts actually come out. Here's what happened week 108. 55 alerts, 6 never triggered, 48 actionable, 8% of actionable alerts were stopped out. That brought us to week 109. Okay, now we start Sunday night, 6 p.m. Eastern. Okay, so the very first alert to come out, that's Sunday night, time you see on my screen specific, August the 30th. First alert to come out was on gold. It was a carryover from the previous week. The very first alert for the brand new week, week 109, was to buy the S&P 500 Emini futures, ESU20. We've now rolled forward to the Z contract, so ESZ20 is now the current symbol for the S&P 500. They're said to buy 35.15. Initial target 35.17. Next target, 35.25. The swing high was 35.21.75. Okay, so from 35.15 to 35.21.75, that's 6 points. At $50 a point, that would be $300 per contract traded. This one alert, the first alert, sent out Sunday night when the Globex markets open for the week. If you had taken this trade, that's what you could have done. Here's a buy, the second alert that week, right on a minute after the S&P. We're right into the Dow. Buy the Dow at 730. Initial target 750. It ran up to 768. So from 730 to 768, that's 38 Dow points. At $20 a point, well, let's just call it 30 points. At $5 a point, that's what the Dow pays. It's $150 per contract traded. So this paid for a few weeks of our service, and this paid for another week. And then on the Russell, we said to buy 1584. Initial target 1586. Ran up to 1587. At the time this was recapped. See, as soon as the trade triggers and makes the initial move, we recap it. Okay, doesn't mean it doesn't continue on further. But from 84 to 87, that's another $150 per contract traded. Here's the NQ. By 12.025 up to 12.035. Made it up to 12.034.50. That's just shy of $200 per contract traded. Here's crude oil by 43.05. Initial target 43.15. It ran up to 43.16 at the time of the recap. That's $100 per contract traded. Here's silver. Silver went from 28.25, past the first target, past the second target, put in a swing high at 20.38. So that's 13 points. That's $600 per contract traded. And then here's the Australian dollar. That all happened on a Sunday night. Most of the world doesn't even think about trading till Monday morning at 9 a.m. or 9:30 a.m. Eastern. We get a lot of work done on Sunday night. So then that rolled us into Monday. Okay. First out of the gate was a short on the Dow at 28.545. And we dropped to 28.525. And then we dropped to 28.490. And then we dropped all the way to 28.470. So from 470 to 545, that's roughly 70 points, $5 a point, $350 per contract traded. I'm not going to do the math on every one of these, but I'm going to scroll through them slowly so that you can hit pause as you're watching the video. See the little number in brackets up here? That is after the initial trigger. That was the immediate swing high. Now, chances are price pulled back, triggered again. There may have been additional swing highs higher than this, but for the purpose of recap, just to be transparent, just to be honest, we just keep it reasonable. This was to sell the Russell at 50.70, down to 68, down to 67, down to 65/66, the weekly trading zone. Made it all the way down to 15.62. If it had just gone from 15.70 to 15.65, that's 5 points at $50 a point. It's $250 per contract traded. Now again, I'm not going to do the math on every one. It would take forever in this video, but I'm going to scroll through them slowly so that you can hit pause and you can do the math. Okay. Now you have to understand the way the process works. The markets are open, they're trading. You've got your phone with you, or your tablet, or you're sitting at your desk. You've got Telegram installed. When I send an alert in the alert channel, your cell phone, tablet, computer is going to go dee dee dee. It's going to make a little telegram sound. Pull it out, look at it. If you want to trade it, you go to your computer, you sit down, you put on the trade. Okay. When you come across ones like this that have Z's, that means it just took too long. It never actually triggered. So we walked away from it and moved on. S&P, again, selling 3502 down to the weekly zone at 3500. It dropped to 3490. That's 12 points at $50 a point. $600 per contract traded. Another S&P, sell 3502 again. Caught a bounce, same trigger, 3500. This time it dropped to 3497. No trigger on the S&P. Short on the Dow. Selling 300 down to 280. It dropped all the way to 257. So if it had just dropped to 260, that would be 40 points, $5 a point. It's $200 per contract traded. Stop out on the Russell. Short here on crude. Long on silver. Long on the S&P. Long on the Dow. Long on the Russell. This was a short on silver. By the way, a $1 move in silver pays $5,000 per contract traded. Right here, S&P, buy 35.32. Initial target, 34. Next target, 42. Came within one tick of that second target at 42. From 35.32 to 35.41. It's 9 points, $50 a point. It's $450 per contract traded. So now I'm just going to start scrolling real slow so that you can hit pause anytime. When you see thumbs up, that means we made the target. These alerts come to you, by the way, in real time in the Telegram channel before they trigger. This isn't an after the fact, woulda, coulda, shoulda kind of thing. Okay? We're very transparent. Our alerts are made available to all our traders before they trigger. And then we recap the results of every trade. The good, the bad, the ugly. The ones that hit the target, the ones that get stopped out. You get the idea. Okay. All right. Russell. B means buy. T means target. PR means potential resistance. So this is a long, okay, on the S&P, 3591. Initial target, 3593. Potential resistance, 3598. Potential resistance, 3620. Okay. So think of that as first target, second target, third target, fourth target. In this case, this one never actually triggered. That's gold, silver, the Dow, S&P, Russell, okay. All right, let me just scroll through here so we can cut to the chase. Remember, you can hit pause anytime and do the math. Let's stop out on crude, silver, S&P, Dow, Russell, NQ, gold, silver, no trigger. Stop out on the S&P, no trigger on the Dow. It's a short on the Dow, Russell, NQ, S&P, Dow. Which brings us to the recap for the week we just went through, 109. What you just saw were 54 actionable alerts. 54 actionable alerts out of the 62 issued. 4 of them got stopped out. That's a better than average week because we average about 20% being stopped out. So that was 7%. Now the week we just finished, week 110, this was the first alert coming out Sunday night. Sell 33.90. We dropped to 33.80. It's 10 points at $50 a point. $500 per contract traded. So again, I'm just going to scroll through the whole week. You hit pause whenever you want so you can put pen to paper. A couple stop outs, Russell NQ. That's British pound. It's S&P. Crude oil, silver stopped out, S&P. Stop out on the Dow. No trigger, no trigger. Here you've got a short on the ES, short on the Dow, short on the Russell, short on the NQ, long or buy gold, crude, S&P, Dow, Russell. These were gap fill trades, Russell, NQ. No trigger, no trigger, no trigger, no trigger, no trigger. A stop out. See, we give you the good, the bad, the ugly, right? You only need one of these trades a day. The idea is that as you become consistently profitable, if you have one of these good alerts a day, then you're going to increase your account balance by $2,000. That's how our blueprint works. Start out in the demo account, make sure you understand how to put on and take off the trades, make sure you understand the strategy. And then once you go live, all you need is one of these trades to work out. Because your goal is to increase your account balance to $2,000 by $2,000 so you can add a second contract. Once you add a second contract, our blueprint will tell you when it's time to add number 3, number 4, number 5. By the time you earn the right to trade 10 contracts, guess what? This $500 trade we were just looking at becomes a $5,000 trade. Same number of points. The key is you're increasing the number of contracts you trade with profit you earn. Not your savings, not your 401k. Long on the Dow, long on the Russell, stop out on the NQ, stop out on crude. Buy silver, sell the S&P, sell the Dow, buy the NQ, buy the Dow, stop out on gold, buy the ES. That's a no trigger on the ES. That was a short on the ES. To buy on the Dow, buy on the Russell, NQ. Here you have another batch that never triggered. Here's the S&P. Okay. Getting long short at 36, it drops to 27. It's 10 points, $50 a point, $500 per contract traded. Stick around long enough to earn the right to trade 10 contracts. That's a $5,000 trade. But don't just throw money at the market. Put together 10 consecutive days in the simulator, proving to yourself that you understand the strategy, that you understand how to actually put on and take off the trades. Enter your stop loss the way I teach you, all of those things. Otherwise, you're just throwing money at the market. And, well, if you're like most traders, you've already done enough of that. Okay? Short on the Dow, silver short, NQ short, stop out on gold, short on the S&P. Mistake I made, so we just exited out. I forgot to change the contract to Z. We're now on the Z contract as of Friday. Now this one that I'm showing you right here, it's this one right here. I told all my traders to sell 32.20, 33.39 right here. Initial target was 33.37. Next target, 33.35. See it? Then 33.28. Then 33.20. And then the final trade to target, still be waiting on a Sunday night down at 32.95. Okay. From 33.39 down to the target we reached at 33.28. 11 points, $50 a point, $550 per contract traded. Now, from this entry to the swing low, okay, 41 points at $50 a point, $2,050 per contract traded at the time the recap was done. So this would be all Friday stuff. We're into the Z contract, right? There's another S&P trade, another S&P trade. And so the week we just wrapped up, week number 110, I sent my traders 66 Logic 247 alerts around the clock. 51 of them were actionable. 9 of them got stopped out. That's 18% of actionable alerts were stopped out. Now, if you already have those kinds of results, well, congratulations. You're doing real well. If you're not having those kind of results, we can fix that. Or we can help you fix it. Go to eminifuturestrading.com, get signed up, and Sunday night, 6 p.m. Eastern, when the Globex markets open, you'll be in the alert channel with us and in the discussion group with us, and the alerts will start coming out. Entry, target, potential support, potential resistance. I just showed you everything that happened in Logic over the last 2 weeks. Now, quite frankly, if you can't earn the cost of our weekly service in 1 or 2 trades, you know what you should do? You should fire us, honestly. Not only do we give you the high probability trades to trade, we spend 2 hours a day teaching you how to find these opportunities yourself. Someday I'll take the time to learn how to spell. There you go. Oh, you can keep beating yourself up. You can keep blowing up accounts. You can keep chasing the Holy Grail, which honestly doesn't exist. Or, I mean, that puts you in part of the 9 out of 10. We know that 9 out of 10 new traders fail. Why? They don't have a business plan. They don't have a trading plan. They don't have a definable edge. And why don't they have any of those things? Because they don't have a teacher. So really what you're doing for $97 a week is you're hiring me to be your teacher. You're paying me to hand you these trades round the clock as opportunity presents itself. And then my business partner, Michael, in the mornings from 9:30 a.m. to 11:30 a.m. in a live GoToWebinar environment, he's taking off trades live in real time, teaching you how to find these setups yourself. So you really have the best of both worlds. You've got incredible trades that you can trade, and we're showing you how to find them yourself so that someday you won't even need us. So if you're paying more than $97 a week, you can stop that. Now, if you're paying $9,000 a week, but you're making $90,000, well, that's a great deal. You should probably stick to it. But whatever you're doing right now, if you're spending more than $100 a week and you're not getting all of this stuff, then you need to come to eminifuturestrading.com. That's where you're going to find everything you need, one low price. It's very, very simple. Sit in front of your computer. The alert comes in. You put on the trade. You follow the directions. You follow the instructions. You follow the guidelines. You take profit at the appropriate time. And then you get to ring your bell. Just like that. I'll be standing by in the channel Sunday night, 6 p.m. Eastern, when the market's open. And the alerts will start to flow. Week number 111. I'll see you there. Just go to eminifuturestrading.com